There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Hope everybody has had a good trading week. Reporting from the post down here in Florida, we had a hurricane. For those of you overseas, hurricanes can be quite brutal. This particular one was, in my opinion, a Cat 3, even though they say it was a 4 on TV. Turned into a tropical storm, which typically is the case when they hit landfall. We are in the center of the state here in central Florida, so it was not that bad. But let's just say with the ridiculous amount of oak trees I have in my yard, I am not interested in picking up sticks anymore. They're now chasing me through my dreams. So in any case, today is the 1st of October. What does that mean? It is Q4. Understand this if you guys have gone through some of the past, as I hope, and stuck through some of my long droning on diatribes and tangential discussions, right? You will know that October is one of the most volatile months of the year. Now, that being said, there already is just whole coasts of unhingedness, if you will, in the trading world, as there is unhingedness among certain populations of people. So, let's take a look at the news first. Do note next week, Monday, Tuesday, Wednesday, Thursday, no Friday, bank holiday. I don't know what the hell this particular Chinese banks will be closed in observance of National Day. Maybe they'll just be planning their invasion of Taiwan while they're on vacation. But the non-farm payrolls next Friday. I don't know, this isn't going to have much effect, but do be aware of these red folder events. I mean, I can't tell you how I sort of crack jokes and make light of this, but most of the blow-ups I've seen in people's accounts, there's been a whole host of them among some of the biggest recently, because of the fact that they just do not employ the most simplest of forms of risk management in the account. One of the biggest is not paying attention to news events while you have trades on, right? Seems like, oh, that's never going to happen to me. But in fact, it actually does. So do be aware that it is critical that low volatility, unless you are a vol-based trader, be exercised when there's trades on, right? I mean, you want them to work. You don't want them to just go off the rails, right? So, non-farm Friday, again, doesn't really matter unless it was probably some big surprise. The only thing that matters is anything that says PPI or CPI on the screen. I don't care what country it's coming from, as long as it's a developed market. Any of these are of a concern, right? As you guys know, in the UK, if you've been paying any attention to our casts, I did not do one earlier this week because of the hurricane. A lot of people without power down here. The measures that they are taking in the UK, let me just say that, the policymakers, whether it be the Bank of England, which is their central bank, obviously, or any of the policies that have been implemented that have had a dramatic devaluation effect on currencies, bonds in that country. It's be the guild. It's 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 almost shocking. Although you really can't say shocking about anything that's related to policy making these days in any country, because there's lunacy everywhere. I think I always miss the days where cooler heads prevail, right? But in this particular case, um, cooler heads are not prevailing. There is nuttiness going on, and the devaluation of the pound has been almost a clinic in what can happen when things like this go off the rails, right? And the myopicness, we're pulling out all the big word dictionary this weekend. My mom would be proud. To all of the central bankers. So I've used the example in the past where it's almost like everybody's got horse blinders on, right? If you take a myopic view of something, you're looking right in front of you, right? You can't see the forest through the trees. You're just paying attention to the first few steps in front of you. And in the case of most central banks, that's inflation. And in the case of most of those numbers, they are lagging indicators. They're not leading, right? I think they should be paying more attention to changes in, global imports and exports and, the current account balances of a country, right? Which is just the difference between imports and exports. Because those can help give a little, canary in the coal mine, if you will, to what's going on with some of these numbers. So I'd be more of a forward looker. So I challenge everybody to look forward to some of that stuff. Plenty of ways you could find that information. Get a Bloomberg, you just Google it. Start off with current account deficit of whatever country's majors that you're trading already, right? And you can see imports versus exports. If there's huge shifts in there because of whatever supply chain disruptions or costs of products or there's changes in demand, right? There's your insight into what inflation's going to be, right? You don't have to wait for a lagging indicator to come out. So that is my pulpit. I am now off the soapbox on that. Stop looking at lagging indicators and start focusing on the ones that are leading. I have pretty high respect for Jerome Powell, but I think he's getting caught in a vacuum that is probably sucking him in from the standpoint of policymakers that are running DC, right? I'm pretty sure they're just sucking him into a vacuum and he's living in a bubble of what they tell him, right? Kind of like the president. Everybody has their set of handlers, right? When they should just be thinking and acting and doing for themselves and push everybody else aside, right? So, we don't want this to turn into a long diatribe discussion on how capitalism works, but right now it needs to be reinforced because there's bullets hitting the exterior of it. But looking at charts, let's go to ThinViz. I don't think I've shown these in a while, so I choose daily charts. I choose all thinviz.com. It's actually an excellent site. Even their elite, which is like $20 a month, is killer. I don't have the elite package because I have a whole bunch of other software running this stuff, but I love looking at this from a comparison standpoint. It cost me 10x more to get the same types of comparisons off of any other software on the entire planet. So that's why I use it. So, as I had mentioned, equities more likely going to take out the lows. We did fairly decisively. Notice how we came back up against that line, if you will, on the S&P as an example. See that line right here? It's kind of hard to see probably this small chart, but I mean that's now resistance. It's that whole 3,700 area. We're under it. Doesn't mean we can't get back above it, but just chances are it'll offer a first line of resistance. Notice NASDAQ even lower. Also notice that small caps been holding up pretty good. No surprise. Equity markets finally caught up to the U.S. They're now lower. All the oil bugs, right? Kind of like the oil bugs. They're surprised to see oil down here. Demand's dropping, no surprise. Look at gasoline, right? Eating oil. I'm not going to go through all these, but you guys can kind of see always paying particular attention to what's going on in metals, right? Things were truly getting ugliness from a long-term perspective. Usually gold be going up. Why is it not? I actually don't know the answer to that question. I thought I did. Turns out I've been wrong, and gold's just getting thrown out with the bathwater as well. Not reading as much from that. But with the exception of wheat, commodity prices tell, maybe even cocoa, how important this is in terms of global food chains, but wheat certainly is. But a lot of these prices they're down, right? No surprise, as you increase interest rates, right? All bonds will be less attractive. Why is that? Well, Johnny's got a bond that's paying 2%. He has a certain price he's selling it and buying it for, and Jane's got a bond that's paying 2.5%. She can command more for the same duration and maturity than Johnny can. So it's simple. So what happens to the current prices of bonds? They go down, thus pushing yield up. So for the first time in 12 years, can't surprise I'm actually saying this. I mean, there are money markets and short-term, what's called single premium deferred annuities or CDs, or ultra short-term bond funds. JP Morgan's actually got a good one. It's JPST's the symbol. The yields on these things, they're like 4.5%, 4%, 3.5%. I mean, remember what I said about bad periods of time? If you aren't comfortable being short, right, which should not be the case in the currency markets, you should have comfort both ways. But a lot of investors, and an overwhelming majority of investors and institutions for that matter, they just don't like being short, right? They'd rather just go to the sidelines and wait it out, right? So if they can time that right, in many cases in the last 12 years, all of that cash sitting on the sidelines never brought them really any return, because interest rates are, dependent on the country, anywhere from 0, or I should say negative 25 basis points, all the way to 75 basis points. They basically weren't paying you anything on your cash. Now you can earn, if you play your cards right, somewhere in the area of 3 to 4.5% on your cash. It's crazy. So it's an alternative. No, it's not beating inflation. Yes, it is a place or you can at least earn something on it, maybe about half the rate of inflation currently. But when you have inflation, and inflation is roaring, right? Commodity prices don't look like these charts, right? That's where I said, let's focus not on the past, right? So somebody listening to this would be like, well, Steve, it seems like your thesis is that the Fed should not have raised interest rates. No, I think they should have. I don't think it should have been 75. I would have voted for 50, and that would have been it. Let it play out over the next couple of quarters of inflation, right? Maybe I'd be wrong, but then I wouldn't have to walk back my increases with the decrease when everything started getting crushed, right? They already knew they were going to crush the credit markets, which should level out, by the way. I think the surprising thing to many is that you have had just huge sell-offs, and these charts are all dailies, but if you take them and move them to a weekly chart, get back down to the Forex area, they're all big time down, right? A lot of times when you move to any type of higher time frame, if you're new to looking at candlesticks as far as analysis of movement, it's always best to look at the broader macro trends of them on a weekly chart, in my opinion. So the weekly chart tells us what? Everything in the majors, which is the 8 you see here, is down. So, except for the US dollar. So as I've been joking for the last couple of months, the only thing that's going up is, double short ETFs and the dollar. That's it. So what we want to glean from this is just a off-the-cuff comparison of what's going on from one currency to another, right? We're not making trades on this, right? It seems like maybe from the very beginning of this role here at Auvoria, I talked a lot more about trades and trade setups, which I've talked just in mass amounts about. You can go back and see all those, especially in the first couple of months that I was in this role, which was like first quarter 2000, if I'm not mistaken. I even forget. But they're all up there on the video channels, both Vimeo and YouTube. You can actually also link to them if you want through our corporate website too, which is just firstdownfinancialinc.com. Go in the upper right corner, click on media, and you can actually see a link to the cast, podcast, video cast, whatever you want to call this. So what are we seeing? We're seeing almost looking like a shooting star pattern in the U.S. dollar. A real breakdown in the Canadian dollar. I think a lot of this has to do with some tanking in the commodity markets, which this country is rich in those resources. Off for that, it could be in reaction to this pound move's just been ridiculous. I should almost need to analyze this inside of trading view instead, but just want you guys to see the magnitude of how this move's played out. This is crush the Bank of England type of move, right? Not saying that's happening. Just reference back to the time of everybody's favorite global elitist, crazy ass lib George Soros tried to break the Bank of England back in 1992. You can look back. There's been all kinds of books written on a couple of movies. He made about $1 billion off the trade. And it was a lot of wild moves like that you're seeing over the last number of days. But this is what I call waterfall moment. So more than likely, could be wrong on this one. If we go to DXY, just give you guys a quick glance at DXY here. We do so let's just for some reason these newer versions of this OBS really put a lag on them. It's hard to just understand. This is a Core i7 system with 32 gigs of RAM, and this is a Blazer. This software just really dragging resources down. All right, so DXY, talked a lot about this. I'm not really going to get into it. I've gone through all the levels. You can see the levels on the screen. I would imagine we break back down into this lower level. It's just been that much of a move higher. If you look at it on a weekly chart, even if you reset the scale, it's still way up. And it's, almost on a weekly touch the upper Bollingers, which it's only done just a few times here. But the point I'm trying to make is it was a much, much more stretched out group of bands. See, they're not tight like you would see in this zone right here, right? It's an opened up or a wider mouth that they sometimes call it bands. It's much, much higher as it's a wider mouth in these bands. Just makes it, if you're coming close to touching this, it's a ridiculous amount of standard deviations out there. So what's that telling us? Well, it's telling us it's truly oversold and is due for a quick snapback, which, here's the euro, by the way. I would encourage everybody that's in the U.S. that's trying to buy something in Europe online, of which I've bought a couple of things. Make sure you get these guys on the phone, and then you tell them that the exchange rate that they're seeing on the website is not in line with what the rate is right now. It's just basically a dollar for dollar. If you don't want to order it from on the phone, you can send her the FinViz. They have continued to try and gouge premiums out of us here in the States because of the simple fact that they're going off of some exchange rate they set from some period of time ago, right? So if you're using a credit card, the price should just be the price for either a U.S. or a European resident, in my opinion. If you're paying in euros, yes, there's more of a shipping charge, right? But I don't think they should upcharge you 20% on the currency. I think it's ludicrous. So I brought it to the attention of this one group I buy a lot of mountain bike parts from, and they corrected it. So just heads up on that one there. Or for that matter, really anything that you're out there buying. For once, you actually may be able to benefit, which used to be real popular about 15 years ago, from what's called European delivery. So if you're purchasing a German car and they have what's called a European delivery program, the money that you save on the car that you purchase in Europe pays for your trip there, and then they ship the car back to the U.S. It gets its emissions and stuff. It's actually a pretty cool program. I participated in it once when I took delivery of an M5, and we just brought the car back on a boat. It's pretty cool. We got to drive down on a boat and all that stuff. In any case, that program died. It made me back. Why'd you get off track, Steve? Let's see. This is all kinds of things you could take advantage of as a U.S. resident when the exchange rates are favorable. I really need to do some work on studying these movements. Just going to drop this down to a 4-hour chart. I want to see this move. This is actually the first time I've looked at this. You want to probably 1-hour chart. Does that show it? Yeah. So here's the move. This is such a huge move. It took place on the 25th of September. I'd probably have to match this up to the news feeds. See what was announced. It's a hell of a buying opportunity down here long term. Look, you're already up massive on this trade. Maybe if I'd had my head out of the hurricane clouds, I would have paid more attention to this. A little too much depth. So what do we do now? That's a great question. If an event like this takes place and spot 036. Just want to make a note of that. That's almost damn near like the all-time low, like ever. It's crazy to be able to say that, right? So that's the bottom. Oftentimes when you have just absolute waterfall events like this was, this is the bottom. But oftentimes we'll go back and test it. Now, I know there's probably plenty out there in institutional land like, Steve, you're nuts. Telling you, I've seen this over the last 20 years. It seems like, oh, we'll never get down. It was just a flash reactionary move. What it's taught you, if you are a studier of auction market theory, efficient markets and quality volume on your analysis. If in fact both of those are the case, that the history of auctioning, I don't care what auctioning or what type of price, it oftentimes will come back to the scene of the crime. So I could actually talk for hours on this, showing all kinds of stuff from, almost the last 800 years of the pricing of all kinds of stuff, right? Talked a lot about auction market theory in the past, but the other interesting thing to note is that you also have some missing notches right here at this 1.09. You don't even need to go back. And, a lot of times I'm zooming the windows in and out to try and get data in there, right? You don't even really need any more data in there. I mean, this is it. So if you trust the FXCM data, right? Don't get me started on that. We have some missing notches in this auction. So that means that more than likely, at some point, we're probably going to get back down an auction in this range. That's a big range. So, I mean, here's the top. You already got the bottom. Top's like 112. Notice we had a rejection there. Unless the Bank of England comes out with some just prop our currencies and our cut our inflation down types of moves, get our current account deficits straightened out, because obviously they are importing a heck of a lot more than they are exporting in terms of merchandise. Crazy stuff. Imagine the technical guys will be talking about this for a long time. Not going to spend any more time on you guys having levels. I was surprised to see put this one in perspective here. So you have a little bit of a handle forming here and then just boom, right out. So it's going back and seeking, it seems to be the highs. So even though the dollar has really had a pullback slash type of week, the Canadian dollar's just got clobbered. I think a lot of it has to do with those commodity prices dropping, lots of natural resources, less demand, right? I did want to take a look at, nothing's going on in the coin, so let's skip past that. I did want to take a look at this Japanese scenario. So we're on a weekly chart again. Expand this out. I want you guys to put this in perspective. So we're looking at in 10 years. I mean, this is just crazy. I mean, Japan has been quantitatively easing for 2 decades now, much more than most countries, like ever, and it just continues to devalue their currency. It'd be very concerning stuff, honestly, if I was the Bank of Japan here. Aussie US. commodities prices come down, I would expect this to break through the lows. Expect the Canadian to go lower. Let's take a look at GBP CAD. So So this is one of those things where, again, martingale, it's going to crush you. I know that flies in the face of a lot of experts that write software-based trading algos, but down here, you've had such a crazy move that your brokerage firm would have blown you out of all your positions covering margin that was getting just torched in your account. A huge rip. Who knew, right? A lot of this is all, boy, I gotta believe there was just some absolute Q clearing accounts that got blown out globally in some of these moves. It's a good argument for diversification among pairs that one trades, right? Let's take some screenshots of this stuff. This is crazy. Half this stuff, I sit here perplexed because I don't even have needle levels that I can show. Just because this has just been so wild. It's almost like you got to just focus on drilling down to the lower 4, maybe 1 hour charts to develop any sort of trading strategy. But let's just use the power of the indicators I have. For this one, the 1.57575. Look at that, it's crazy. 5757. That would be the high. If the theories of incomplete auctions play out in almost all situations, then obviously you'd have a visitation down to this bottom here as well. Just 1.4. So hopefully Neo's taken some of this into account. We haven't paid enough attention to what the software's been doing over the last week. Let's see what's new. It's always a great place, by the way, if you're a trading view person, find out what's going on. You can actually click on. Most of these guys will write blogs, which I think is awesome, on what they're adding to it. In many cases, they've added a lot more data recently and some more tools. I don't use a lot of drawing tools, if you guys notice. I have them built in automatically I'm not drawing a lot of lines, mostly because of the fact if I'm not drawing it, it forces one to try and visualize what that line should look like. And you're not handicapped by having to draw it. Remember that some of the best traders in the world are able to visualize what they see playing out on the chart, and they will trade accordingly. A lot of that is, just in my opinion, you're putting crutches on yourself if you spend time trying to draw up all kinds of lines on stuff. That's why you don't see it here. Quick analysis of gold. This is the big picture. This was the edge of the cliff, and now we're off it. I'm surprised that there hasn't been more forced liquidations, because I can promise you this was huge stop land right here. If we look at spot, this is it. It's 1684 an ounce. Now we're under it. So, no surprise, oil and gasoline are in a big decline. Not a surprise. This is a weekly chart again. You can see kind of where we are, where we're going. If you do trade oil, this is a big area that we're headed towards. This whole 60 barrel thing. Notice how much of what they've been saying on television, the so-called prognosticators who have been dead wrong on a lot of this stuff, you don't see their faces back on TV, right? Don't blindly follow those. Oftentimes they are wrong. Very cool. I'm going to cut it there. Yeah, what I would suggest, let me open this up before I take it off here. I'll show you guys this. Not sure how involved everybody still is with Telegram, having moved most of their stuff over to Discord from all the rooms. I would highly recommend, if you want a deeper dive on FX fundamentals and why the vengeance that I've touched on just very briefly in global is all based on vulnerabilities. This is an excellent clinic, if you will, of understanding the vulnerabilities in relations to countries' debts and deficits. So it goes into a current account deficit as an example. And Alf's actually done a really good job of breaking it down into a chart. So if I am looking at the current account, remember that there's a key here for this as far as like the ranking, right? It ranks them all the way to the bottom. Where are they in terms of the current account deficit, fiscal, and debt vulnerabilities, right? You can see how everybody stacks up. Pretty cool. Right, buddy, wish you a great trading week. My name is Steve Vetterl. I try to do these calls on Saturday just a bit after 10 a.m. Eastern time and on Tuesday around 1. Wish everybody a great and heavily drunken weekend. My name is Steve Vetterl of Auvoria Prime. Off the mic.